Welcome to Better Credit, Better Home, your source for the latest local and national news that can impact you if you are in the market for real estate. Here are your hosts, the Kingwood mortgage guy, Mike Durr, who uses his 25 years as a mortgage professional to help people improve their credit, and Joe Salas, an accomplished home inspector, real estate agent, and trainer of new agents for Byrd Property International. Together, they will help you understand what you need to know to get the most out of your real estate investment. Let's get started.
Let's get started.
Together, man.
Together. All right. Let me see if I can get this guy out. And I'm going to add Tim. Let's see if Tim will come up here. I want that to go away. Remove. There we go. That's you and me. And move from studio. There we go. There's Tim. Now we're going to add him there. Hey, Tim.
Hey.
All right. So here we are, the Three Amigos. No, I'm not going to say Three Amigos. I think that's another radio show and a bad movie, too. But we changed things a little bit today. And really, the whole point of this session is to answer consumer questions about the mortgage business. And we target this really for first-time home buyers, but it could be for anybody. I mean, what happens is when you move into a house and you live there for 5, 7, 10 years, you forget about all the questions that you had when you first started and all the things that happened. So with that, Joe, thanks for being here. What's going on with you, buddy?
Busy. We are the other trainer at our brokerage decided to leave. So I've stepped into the gap. You know, I was the trainer. She was my partner in crime, and now I'm only me doing the crime, I guess. But but I'm doing the time as well. So I've opened up my schedule to make sure that the agents at our brokerage are well supported, and we are actively interviewing for other agents to step into a trainer role. So it's been exciting, man. The last couple of weeks have been definitely busy. Love it though, because the time passes by so quick.
I'll bet. Yeah, I was surprised when Monica left. She was a gem, and but I'm sure they doubled your pay, so I'm sure that's a good part of it, right? Tim, what's going on with you, buddy?
You know, we're doing good. It's still a little bit slow on the appraisal, side of things, but we are seeing kind of an uptick with some refis and a purchase or two. So, we're happy with that for sure.
Well, on that note, I've noticed an uptick in applications, which is, I think, an important thing. Sure. But I was talking to you guys about, I have no graphs today. I mean, this may be the first show where I didn't have a graph. So I think that's a good thing. So let me pull up our slides here and see if that'll pull up. There we go. And so you guys ready to get started?
Let's do it.
Get started.
Oh, man.
All right. Let me go back to that. Well, so what are the top 10 questions first-time home buyers ask? And it's by Better Credit and Better Homes, Mike Durr, Joe Salas, and our guest, Tim King of EST Appraisal. So we like to start it off with a little realtor humor, and some might add that it's very little humor in the realtors, but I thought these were pretty funny. This is, Joe, you might want to do this. I call this realtor humor. So running into an old friend, hey, I just bought a house. You, congrats. Didn't you know I'm an agent? Oh, I forgot. And then, can you do that look? Oh, man.
Yeah. It's called working your sphere. Make sure you work your sphere.
Yeah, no kidding. The other one is, whether getting a haircut or selling your home, always hire a professional. And I'm sure that those guys I don't know where that is, somewhere in Africa or Philippines or somewhere. So that's it. Actually, this happened to me, and this running into an old friend. I was at HEB just down the street, and the young lady saw me, and I didn't recognize her, but she recognized me. She goes, "Mike, how are you? I just refinanced." That's exactly how it went. It went just like that. And then I kind of looked at her and I went, oh, well, great. And at that point, she kind of went, oh, yeah. She kind of went, oh, but
Yeah,
in her mind, when she saw me, she said, Mike, and then the mortgage guy, and she said, mortgage, yeah. And I just anyway. So I guess that's just how people think. I don't know. It was interesting. All right, this is my version of lender humor, and you can relate to this too. The first thing this kid is he's skipping a few steps, is what he's doing. And the first step is build credit, save down payment, get pre-qualified, make an online offer. Let's just go for it, right? And the reason I liked that one was because that's going to be consistent with what we're talking about today. And then our old friend Roseanne. I saw something that Roseanne's coming out with a new look and a new show, but when my realtor tells me all the documents I need to find to get approved for my loan, and I can feel this pain, and a lot of time stuff is funny when it's closer to true, but people don't really, I say in general, a lot of people take really good care of their financial documents, but there's a lot of people that don't, and they have no clue where their W-2s are or where their copy of their social security card is. And when they do that, and you can hear them kind of go, oh, am I going to be able to do that? So anyway, I guess that's not even funny either. Darn it. All right, so this is what we're going to cover. These are the 10 questions that came up. This was, I reviewed a lot of questions that homebuyers have, and it's legion. I mean, and there are a lot of good ones. These were on the first list that I thought was one that we could get through pretty quick. So it's what is the required credit score? What is the minimum down payment? Are there special programs? What are costs beyond down payment? What is the role of the realtor? I wing that one, Joe. That's for you. Can I buy and sell at the same time? It's a good question. Is a home inspection necessary? You'll see. How long does it take to close? Can a buyer back out of the deal? I thought that was an interesting question. And when will the keys be turned over? So we're going to flash through that. We're going to going to show you what the rates were today, which are pretty good. And let's get started. All right. What is the required credit score? Well, it's different with different lending entities and different scores for different programs. And there are a lot more programs, like there's multiple programs in conventional, and FHA has a couple different ones, USDA, but just in general, conventional minimum score is 620. On FHA, they'll do deals down to 550 to 580 is the kind of the low end. We prefer that it's about 600 or better. That's our key for us. Now we can do them down to 550. They just get real hard. That's all I can tell you. USDA 640, and I'll tell you a little bit about USDA. VA 550, non-QM, and non-QM is self-employed bank statement type program, 680 on that. And then jumbos require usually a 700 FICO score. So that may be good information. Obviously, if you have any questions, I'd love to answer all those questions.
I got a question, Mike, before we change slides.
Fire.
I was reading the other day, and I don't know where I saw it or in what context or whatever, but somebody had mentioned that VA doesn't necessarily have a lower end credit score. Is that true?
That's true. Yeah, it is true. So VA is one of the ones you could do with no credit. The problem is they do have standards. In other words, they have a limit that they'll go to, and I've seen them done in the 550 range. I've heard people that did them in the lower 500s.
Okay.
But boy, when you get into that arena, they're hard. And the VA have underwriters. The underwriters are looking for all the things to work. And so anytime you get below 550, I mean, that 550 can be pretty ugly. So, and just think about if you were a listing agent and somebody said they qualified with the VA. I mean, there are a lot of people that do VA loans because it's a great loan, and they have 700, 750, 800 FICO scores, but you just don't know if they're qualified with a VA and they've got a 502 FICO score, and you're the listing agent, and you call the lender and say, so this guy's pre-qualified. Oh yeah. And he goes, well, what's his credit score? Well, I can't tell you that.
Yeah, right.
So anyway, that's the way that goes, but that's a good question. All right. So what is the minimum down payment? So this is a lot of people will be surprised on this, but there are a lot of people that think you can't buy a home unless you have 20% down. Well, the minimum down payment for each of these different entities is a little different. For conventional, it's 3% for first-time home buyers, 5% if you're if you've already had a conventional loan or you're not a first-time home buyer. FHA, pretty much 3.5% is the minimum. USDA, 0 down, great loan. VA, 0 down. Non-QM is kind of like a subprime, even though it requires a 680 FICO score. 10% down generally, not much less than that. And then jumbo is usually 10%. Now, what I'm telling you, these are not absolutes. There are some programs that, like there is a jumbo out there that might do 5% down, but these are pretty good general terms. And so the whole myth about you needing 20% to buy a house, cast that puppy right out the window. Any questions on that? Nope. All right.
Good.
Are there any special programs? And I just ran out of the thing for first-time home buyers is what it is. And so local areas like Houston has the city or the county probably has a home buyer assistance program that some people can tap into. Now, I'll be the first to tell you, I've tried that. It just didn't work.
It's very tough.
It's tough. I mean, you really have to.
Lots of moving parts.
Yeah. So I don't encourage you. Well, I'm not going to not encourage you to do it. I'd say try it, but don't expect miracles on that one. But almost all our lenders have home buying assistance program that allow you to get in with no down payment or no closing costs. Now, they don't have both, but they'll do one or the other. All of them are based on FHA platform or the FHA platform for the loan. Some of them have a second lien, some don't. Some have forgiven option after if you live in the house and pay your mortgage for X number of years, 5 years, 2 years, whatever, you don't have to pay the second back. And all get the money by raising rates. That's the negative, is it's an FHA loan and the premiums that they collect on the FHA product is what fuels this. And that's the only reason I don't love them, but we do them because for some people they're good things. Okay. Any questions on that?
Nothing's ever free.
Nothing's ever free. That's right. You know what? I'm going to go on a little bit on the special program thing. One of the things that I like to do, I like to explore all the options that a borrower has to come up with the 3.5%, because particularly in this market, it's not that hard to get a seller to pay closing cost. You know, and there's a handful of ways you can do that. You can, if the property appraises, you can add to the value. You can make the sales price a higher amount, and then you go back. As long as you stay under the appraisal amount, you can add that amount above that, and then basically finance the closing cost. Or then in some cases in this market, there are people that homes are sitting a little bit longer than they used to, and that could be one of the concessions that they allow the closing costs. Correct. Tim, when they do the closing cost thing, how does that affect an appraisal?
You know, it depends on the area and, you know, what's going on in any given market area. But I mean, generally speaking, you know, within 3% is okay. I look at that as a negotiation tactic, you know, to where, you know, it's not going to affect an adjustment in a report, but anything over 3% is a little bit higher, and it's almost dollar for dollar amount after 3%.
Gotcha.
Would be an adjustment downward or whatever the case might be. But yeah, and again, it just depends on the market time and the market area. But in general, that's kind of how we look at it.
Okay.
I'm an appraisal standpoint.
That's the answer I was hoping for.
Yeah. Good.
Okay, so what are the costs beyond the down payment? And so what I did, I thought this screenshot here, property tax, inspection, appraisal, I thought that was good. But I'm going to break it down a little bit more. And then you'll see to the right of the screen that the thing that I do, which is called a detailed mortgage estimate. But you've got mortgage lender fees. Usually in the world I live in, there's a underwriting fee, and it's the only fee that the lender charges to us. We pass that on to the borrower. Broker fees are prevalent sometimes, not all the time. Then you have third-party fees, and the third-party fees could be the appraisal is one of the main ones. You could have a flood surge. You could have a couple other third-party fees. The title company is effectively a third-party fee. They're just a big one. They're a big old honking one, because you've got to pay for the title insurance, you pay for the escrow, the management of the thing. So prepaid interest, tax, and insurance escrows. And what I put on there is you can anticipate that being anywhere between 2 and 3% generally. Now, if anybody wanted to get a detailed mortgage estimate, all you've got to do is reach out to me, and I break that down by dollar amounts. And these things are pretty darn accurate. So I encourage you, if you are looking for anything to know a little more detail of what the costs are beyond the down payment, this is the piece that I use for that. And of course, you can call me right down here. So what is the role of the realtor? Joe, that's you.
To look good. No, wait.
Nailed it.
Sorry, this is not selling sunset. Let me rewind. Our duty. A lot of times you hear the word fiduciary, and in my opinion, that kind of is defined by what you have up on the screen. But in shorthand, it's giving our client as much information as we have to help them and protect them through the process of either buying or selling a home. And that entails our expertise in communication, negotiation, understanding comps and the market conditions, connecting people together. It is a duty that we have to give our clients as much help as we can, as much information as we can, to help process that transaction through wherever it goes. And it's not just looking good. It is also the knowledge that your realtor has to help protect you and be valuable throughout that process. And that's what I stress during the training when I train the agents.
Well, that's good. The other part that I like to point out too is that you, as a buyer's agent, do not cost the buyer anything at all. And I think that's a pretty important thing.
Yeah, for the most part, asterisk by that comment. But yeah, for the most part, the seller is paying the buyer's commission.
So what's the asterisk?
The asterisk is if the seller isn't, at one point in time, Lennar last year wasn't paying commissions. And so at that point in time, it's the buyer's decision on whether or not they want to retain and have a realtor help them through the buy process. And if the seller isn't paying commission, or let's say the seller is only paying 1.5%, but the buyer's agent wants 3% for his or her services, then that's a conversation between the buyer and the buyer's agent to say, hey, there's some gap here that you're going to have to make up, Mr. or Mrs. Buyer, right?
Yeah, that stirred up quite a storm of I'm thinking Lennar may have lost a few sales. I mean, I know they were good, but
yeah, just a few.
So that's an interesting thing. Okay, so we'll get through this.
Just to add to that too, Mike.
Yeah.
And Joe, as we talked on the last broadcast, it's very important to find a realtor who is experienced, because there are so many out there, as we know, and I'll tell you what, as an appraiser, we can see the quality and the difference that a sale or whatever can make if you have somebody who's compared to somebody who's experienced and knows the market, and especially that area. Just so very important to find a quality real estate agent and mortgage guy.
That is absolutely correct, Tim. And the last figure that I heard is since 2020, so 3 years, 2.5 years ago, we are now sitting currently at about 50,000 agents in and around the Houston area.
Wow.
Right.
Okay. Sure.
Since 2020, over half of those agents had joined new. So there are 25,000 agents plus out there in and around the Houston area that have less than 2 years or just around 2 years of experience.
Sure. Wow, that's crazy.
Yeah.
That is interesting. Okay, good to know.
That's a big factor. And it's just not doing the buyers any good, or for that matter, if they're listing a home, it's just not doing them any good to have somebody that doesn't have the experience that you're talking about. I mean, this is not that easy gig, and so you just need to know what you're doing. Sure. And you only learn that by going through it a handful of 1,000 times. So, okay, can I buy and sell at the same time? Joe, what do you do when somebody asks that question?
Yep, you can. There are several ways that we can do it. One, the cleanest way is just let's get you pre-qualified to purchase a house before you sell your home. That's the best way to do it if you can afford it and the market's right and you understand the risks involved, which is you might be holding 2 notes for a little bit of time. But there's another way, which is a contingent offer on the sale of the buyer's home. That is a little bit of a weaker offer in a competitive situation because the seller is now saying, okay, in order for the buyer to qualify, they actually have to sell a home. What I do recommend if that's being used is that the buyer go ahead and list their house on the market and hopefully get contracted in before we contract as a contingency for sale of other home on their purchase of the home. That's what my recommendation is.
Well, my thought was the simultaneous closing. I mean, that's what I was thinking about when I saw that.
Super hard to do, but definitely doable. There are lots of moving parts throughout a deal, both on the sale side and the buy side. So can it happen? Yes. But that is super stressful and isn't usually the norm to do a buy and sell closing at the same time.
So I can tell you that we probably do one a month when we were busier, obviously. And it does, I put on there additional stress because of the timelines, but this is something, if you've got good people on both sides, we can make this happen. I mean, that's the key part of that. Is a home inspection necessary? Well, I don't know. What do you think, Joe?
It is, in my opinion, it is both on the buy side. If you're buying a home, even a new home, and I think it's especially helpful on the listing side if you're selling your home. But it's not required. It's not required at all for any of the process, either the contract paperwork from the real estate sales side or even the mortgage side. Now, is it a smart or wise thing to do to purchase a home without a home inspection? Not in my opinion. You want to have as much information as you can possibly gather, and that's what the home inspection does. It gives you a general description of the condition of the home at the time of the inspection. And that information will help you decide on this purchase as the buyer that you're fixing to make. It's super important, super important.
Yeah, I totally agree. And, I'm a believer in that. You don't want to be buying a home that's got hidden damage. And in some cases, not even hidden. It's just, it's just not obvious. And I put this as the top of the list of buyer mistakes. If they, somebody that, even if you've lived in the house for any length of time, I've had some people say, look, I live in the house. I know what all the warts are. I'm going, you may not know that.
No.
There's no check engine light on the house, Mike. At all. At all. And even when you move in and you've had the inspection prior to your purchase, the recommendation is to have an inspector out there every couple of years just to make sure there aren't any hidden gems that you're missing, right? Right. One of the things that I do want to mention here, though, is the quality of the home inspection is important, right? Just as Tim was mentioning about the quality of your realtor that's helping you through the transaction, the quality of the home inspector is also important. Make sure you do your research, make sure you ask for example reports, make sure you review their online reviews to see that, hey, this person is not only licensed, yes, that's a requirement for us as inspectors, but also is helpful in that process, right? You don't want just an inspector to go out there and just green tag everything or, sign off on everything. That's not what an inspector is supposed to do. An inspector is supposed to go into the house as best as they can, following the standards of practice, identify deficiencies that are existent at the time of inspection. That's what you want them to do. Now, common misconception, first-time homebuyers out there, especially you out there that are listening, just because you have an inspection and just because it happens during option does not mean that the seller is obligated to fix any of the things that are found. Okay, that is a common misconception. The seller still has the right, if the offer is an as-is offer, which 99% of the time we're writing as realtors, the seller still has the right to say, I don't agree to any corrections, I don't agree to any discounts, either buy the house as you offered the contract as is, or we can agree to disagree, right? So very important.
Good to know. Yes, sir. And I've got an inspection. We're waiting in the Pasadena house. We're just waiting for our gas meter, and as soon as I get that, you'll get to go out there. Tim's going to go out there, I think, tomorrow and take a look at it. So I've tempted to share a story. When I bought the house I'm living in today, the inspector that came out, and again, I never played myself up of being anything other than a boob when it comes around home handy stuff or anything like that. but the guy, the inspector, I remember like it was yesterday because he gave me a reason to remember him. Okay. And when he inspected our house, we had a water cooler instead of an air conditioner. I don't know what it was called. It was some kind of thing that was common in the 50s and 60s, I guess, or the house was built in the 70s, but it was probably one of the only houses in Kingwood that had this kind of contraption on it that cooled the house. And it lasted for about 8 months. And he told me, and he said, "Oh yeah, this is," and I was so mad at that guy. And I don't know, that's just a quick story, is make sure that the guy you get to do your house is credible and has reviews and is a pro. Okay. And not a good old Bubba.
It's true. And just to add to that, a lot of times, it's expected of the agent, the real estate agent, or the appraiser to catch, a problem with the house. I see that, a lot, and we are not licensed from the state to catch problems in, electrical or plumbing, like behind the sheetrock. So yeah, definitely find a quality engineer type that to do a home inspection, because there are different grades of within that industry. So yeah,
it's interesting you say that, because there are different grades of realtors, there are different grades of mortgage people, there are different grades of appraisers.
Absolutely.
And to the consumer, it's hard to figure out who and what that is. And they sometimes they just have to be led in that direction. But I totally agree with that also. So and I could wax on more, but I'm going to go because we're running along. Oh, I wanted to get to the slide. That's right. How long does closing take? Well, that depends on the lender, and this depends on the borrower and how quickly they provide whatever the lender requires. And this also depends on the appraisal and how fast it gets completed. Go. Yeah.
Where's that report, Tim?
Come on, Tim. We ordered it yesterday.
The appraiser's fault.
Where's that report, man? I've been waiting for 3 weeks.
So just wanted you to know that photo that's on the side there, I just received this was the day before my birthday. I don't think it was a birthday present, but UWM, one of the largest lenders out there, sent me this award, Purchase Business Speed to Close, in recognition of your industry leading closing times. Now, all that really means, and I don't have a lot to do with this, it has to do with my processor, who is on you from the word go, and she's getting that stuff from you, and she's very quick, she's very smart, and that's what makes us really good at that. But best case scenarios, the good answer for this is 10 to 20 days is about average, or that's not true. That's quick. That's and then 30 to 45 is usually what is average, is what I understand. Tim, do you see that?
Congratulations on that award, Mike.
I was thrilled. I mean, I thought it was
fantastic.
But it's for having a good team. I mean, that's what that's about. I wish I had a lot more to do with it, but no, I don't. I don't wish I had a lot more to do with it. I like what I'm doing. All right. And I thought I was going next slide. Oh, can I home buyer back out of the deal? What do you got on that one, Tim? I mean, not Tim, on Joe.
Yes, you can. There are different contingencies and different time periods associated with that. The best one, the most unrestricted one, is option period. So option periods are very important in the process of understanding whether or not you want to continue on with the purchase of the home. I usually tell my buyers, hold off on queuing title for the survey, hold off on queuing mortgage for the appraisal as much as possible, because you want to know that you're going to make it past this unrestricted time period to terminate. And then you can start spending a little bit of extra money in the process of obtaining this home. So there are other contingencies associated with it. There's objections type contingencies. There's financing contingencies. There's even appraisal contingencies that we can write into the offer. It all just matters on how your realtor and you as the buyer approach writing the offer and presenting the offer.
Good to know. All right. Yeah. So once you get in there, just know that you can get out, but you got to be careful. When will the keys be handed over? Well, pretty much when the deal is funded, the lender funds it, title shares this information with the buyers and the realtors. All the money is run through the title company. They're kind of like the referee. I call them the referee fee. The seller is confirmed. They will receive their funds. That's a good day for the sellers. And then finally, the lender confirms that they are ready to fund the loan. That's when you get those keys handed over. Now, you expect it at the title company. In most cases, you're not going to be disappointed, but every once in a while you'll have one that'll roll over just because for whatever reason the lender didn't fund it. So just be aware of that.
Yeah, don't close on Friday at 4.
Yeah, bad idea. Bad idea.
Because you won't be moving in until Monday. Reschedule those moving trucks.
So Joe, do you have a favorite closing day?
Usually I aim towards the beginning or middle of the week, and I aim towards the morning time period. Don't really like closing towards the end of the month because title is getting inundated with a whole bunch of closing requests for the end of the month. But definitely, it all kind of depends on, what's happening with, processing and underwriting, and when we get the clear to close, how much time in between what we contracted as the closing date and the clear to close, and, the availability of title. So it all kind of depends, but definitely not on Friday at 4 o'clock.
Well, and I from a personal standpoint, we don't like to close on Mondays either.
Yeah.
And the reason we don't like to close on Mondays, because if we could close on Monday, we would have closed Friday.
Yeah.
So it just creates a little bit of everybody's had a weekend, and then they get in, they have their coffee, and next thing you know, it's noon. So it's just hard. But Tuesday, Wednesday, Thursday are all good days. Tim, do you care?
You know what? No, I don't.
He gets paid up front.
Actually, I don't. And that's the thing. Yeah, on the last slide, I mean, some of the costs as a buyer that you want to be aware of is before you get too comfortable in the deals, make sure that the appraiser is paid, because they get angry. No, I'm just joking.
Yeah.
But that is a cost that might come out of your pocket if you kind of jump the gun is the appraisal cost, because we do need to get paid regardless if the deal goes through or not. So
yeah, you don't care. So
yeah, Mike, on this slide though, I'd like to put an asterisk on here. Okay. There is some ways to write an offer that may show your offer more competitive than other offers. And by saying that, what I mean is part of what a realtor will do for you, a seasoned realtor that has been in the business long enough, is to make a phone call to the listing agent and ask the listing agent, hey, when do your sellers want to close and when do they need to be out? Because you can do a seller's leaseback, right? The seller stays in the home. You as the buyer are now the owner and landlord, and the seller becomes the tenant, right? In certain situations, especially the last couple of years, that was a differentiating factor in whether or not your offer was considered more competitive than the other offers that were out there that weren't offering a leaseback. Because the seller at that point in time gets their money, they stay in the house, and now they don't have to worry about being out on closing day. They can take their time, they can look for another house. So there are two different types of, hey, when are the keys going to be handed over? Yes, you get those keys on the day of closing, but as a leaseback, then you hand them back over to the tenant who was the seller. So that can be a competitive advantage if your realtor knows how to do it and if you're okay with it as a buyer.
So that's why I'm so glad that you're on the show, Joe, because that's a subtlety, and it's something that a lot of people don't talk about. And I wouldn't even have thought about it, but I'm absolutely convinced that the sellers were in a place where they could choose who is best for them to sell to. And it's not always about money.
Yeah.
A lot of times it's about convenience and that whole transitioning thing. So that's a really important factor. So I'm glad you brought that up. Okay, and then the final slide today is mortgage rates today.
What happened?
Well, they're not less, but they're not more. They're about similar to what they were last week. And it's been interesting because ever since last week when we did our show, they have stayed about the same. Now, the one thing that's different on here, if you look at the FHA, you got 5.875 with a $2,000 credit. Now it's interesting because what happens on the sheet that we look at, it's got a cost and a credit with each rate that's out there. So if we do a 5.75 interest rate with this particular lender, 1/8 of a point less, it costs $1,500. But if you do 5.875, they give you $2,000. So there's a $3,000 swing there. And this is something where one of the things that we didn't talk about is that if buyers need money for closing cost, a lot of times, particularly if they're doing an FHA loan, that money can come right out of the rate and it doesn't cost that much. This would be an example of just, depending, the price of the house is a factor also. But this is one of the places that you might be able to pay just a little bit higher rate and get a big portion of your closing costs paid for. So anyway, that's all I got, guys. Thank you for being on the show today. Thank you for everybody that watched. Listen, if you can, be sure that you subscribe, like us. We'd love to get those little kudos things. And anyway, we'll appreciate you guys showing up next week. And anything from you, Joe?
Just be careful out there. Stay warm.
Yeah, no kidding. It's been cold. Tim?
Yeah, stay dry and order some appraisals.
let's do some house bidding.
Let's do it.
Cut right to it.
All right.
Have a great week.
All right, guys. All right. Thank you. We are ending on that. I think that is all today. So sayonara.
Thanks, Mike.